Hello and welcome. You are watching Business Plus here on News9 Live. I'm Krishnakumar and joining me in the studio is Suyash Maheshwari. Now we begin with the big story that we're tracking here on this edition of Business Plus. In a significant milestone, India overtook Hong Kong to become the world's fourth largest stock market by market capitalization. India's stock market's market capitalization stood at a whopping $4.3 trillion as of the 23rd of January 2024. While the United States of America remains the top dominant force in the global stock market scene, India is only behind the United States of America and to an extent Japan and China. The question we're asking on this edition of Business Plus is India the real Asian giant, and should the world take India's stock markets and its performance as a proxy for how well Asian stock markets are doing, and not usually looking at just Japan and China and, for that matter, Hong Kong and its main index, the Hang Seng? The question here is, should India's weightage be increased manifold when it comes to getting a real mood check of what is happening in Asia stock markets when investors across the world, especially in the west of the world, look at Asia? To answer that question and to understand what exactly is going on, Suyash Maheshwari is obviously there with me in the studio. And of course, joining us is Kranthi, Bathini, equity strategist at WealthMills Securities. Kranthi, we will come to you in just a bit. I'm sure you're eager to answer this question, but let me and Suyash have put things into perspective. Suyash, what exactly happened is that when you talk about market capitalization in India, what does it mean when it comes to India being the fourth largest stock market in the world? Essentially, it means that the total value of stocks in India, if you just add everything, and not just the ones on Sensex and Nifty and the main indices, the total number of listed companies in India and the value of those stocks, which means the overall value of the stock markets, is the fourth largest in the world. And that's quite an achievement, isn't it?
That's quite an achievement. And, if history is, indicator of anything, Indian markets in the last 8 years has been the only markets that has given positive returns. And no other market has been on a bull run for this long. And even if in our bad years, we give returns of about 10 to 15%. And, let's talk about this journey that we were on, and which helped us achieve this massive feat of taking the fourth rank. And it's not just that India, it was rallying, because Hong Kong and China, as you also pointed out, they have been on a correction phase since hitting a peak of 2021 as well. China and Hang Seng, as you can see, has given negative returns in the last couple of years. For the year, I think Hang Seng is down somewhere around 30% or so, whereas we have posted returns in excess of 30%. And in 2023, we were one of the best performing markets, and we just underperformed Japan in the Asia bracket, but also.
So essentially, before we go any further, what it means is that it's not just that the Indian stock markets have been doing well consistently over a period of time, but if you look at that graphic of India beating major global markets, take a look at that. Hang Seng is down 42.3. It's a 5-year period if you were to take it. You're talking about the last year. For last year alone, Hong Kong's Hang Seng is down around 30%. And
down around 30%.
30%. But if you take the last 5 years, look at the returns. Nifty 50 beating every other index in Asia. You're talking about Kospi, which is the Korean stock markets, SSE Composite, which is the Shanghai Composite of China, and then Nikkei from Japan, that's Tokyo, that is, and then Hang Seng is negative drastically. So
we are essentially a multi-bagger there, Krishna. 100% returns. That's a CAGR of 16 to 17% on an average. No other market, as I said, 8-year bull run that we have been on. And, I was just reading a few interesting data points that despite the rally that we have seen, the combined market capitalization of 5,000 listed companies is still below the stocks of your Microsoft and Apple. So we still have a very long way to go, because we have such big enterprises, and we have seen a massive rally in the last 5 years or so. And I think that speaks for itself, because we have turned multi-bagger in a matter of 5 years, whereas other Asian markets have given negative returns. If you talk about Japan, they did better than us last year, but they were long undervalued. Japanese stocks had been considered cheap for the longest of time.
Right. Take a look at that. That's what he was talking about. The last year, as far as India is number 2 as far as Asian stock markets are still behind Nikkei. Fact of the matter is that Hang Seng is down The Shanghai Composite in China is down. Kospi is barely up by 1.6%. Kranthi, the question we're asking here is that when the West looks at getting a mood check of Asia, right? In the West, when, analysts, investors, just about everybody, when they say, let's get an Asian mood check, immediately they go to Nikkei, which is Tokyo and Japan, and they go to Hong Kong and Hang Seng, and probably even Shanghai Composite in China. India doesn't figure in the top 3, whereas clearly India is now number 2 on its way to being number 1, isn't it?
Yeah. Krishna and Suyash, good evening to you. Very interesting point you made, Krishna. Yes, definitely. When the fund manager sitting on New York and want to invest in the Asian markets, the first thing that comes onto their mind is the Nikkei and the Hong Kong indexes are concerned. Invariably, it do come onto the India, but the perception is right now changing. The one main reason, Krishna, just to answer your point, the Indian companies are much dominated by the promoter holdings are high, and the free floats in our companies is comparatively in these markets, whatever be the markets you compared to the Nikkei and the other jurisdictions, the free floats are very less when compared to these geographies. That is the reason the fund flows, even in fact in the MSCI Asia Index, India's weightage is comparatively less when compared to the other Asian markets. But whereas coming to the frontier markets and emerging markets, India's weightage is still on a high. So this notion is going to change. The impetus is coming towards India. That notion has been changing right now. We can expect India's weightage to go up in the coming few years. We can see a drastic change in this notion going.
Fair enough.
India is going to.
Kranthi, I'm just going to ask you only one thing, because that's the point that Suyash made. When you talk about returns, India has been a multi-bagger, for all the less free float. Whatever free float is floating, if you're going to be investing in one of that, you're getting returns of nearly 100% if you invested over the last 1 year. And that speaks a lot also, doesn't it?
Absolutely. Yeah. See, it all depends upon the risk appetite of the fund and the fund manager and the fund flows. Of course, we also witnessed and received a significant amount of fund flows during the year. And our fund flows have been resilient. Sometimes there are some kind of adjustments, but the long only money is coming to the Indian markets right now. But despite of this good performance given by the India, still there are some fund houses and the large companies across the globe. They have been waiting to enter in India for a longer term perspective. Still, they had to make their moves towards the Indian market, but this notion has been changing, and we can expect the fund flows to further accelerate to Indian markets.
All right, and Kranthi, just to play the devil's advocate here, since hitting the peak in 2021, Chinese markets and Hong Kong markets, they have been in a correction phase, and as the graphics were played, they have given negative returns of about 30-35% in the course of the last 2 years or so. So from a valuation perspective, is China looking cheaper and more attractive than India now?
So yes, just a matter of fact. Okay. Of course, in terms of the valuations are concerned, China looks little bit. The valuations look cheap when compared to the Indian market. But given the kind of growth momentum we are in, and the demographic dividends that India is taking place, and the transparent, well-managed companies we have, India have its own strong stage in terms of the world market allocation is concerned, market cap is concerned. So India remains to be a favorite. Okay, it doesn't mean that since China looks attractive at this point of time in terms of valuations, but there are fund managers who are allocating well towards the Indian markets. We all know what China is facing the problem in the real estate and the transparency and various parameters are concerned.
Right.
India remains a favorite destination for investments at this point of time,
right,
given the kind of friendly the business environment the government is creating. Okay, these factors definitely will help the investors, the foreign investors, to look India is one of the good decision, a good destination in terms of the growth is concerned, and also the various parameters what they are looking for to invest in a country.
Right, Kranthi, we will need to delve deeper into what that issue with China's stock markets are, because bear in mind right now what the latest is that the government could be stepping in China to rescue the Chinese stock markets with a booster shot package. That's what we understand. The latest coming in. We will discuss that in just a bit. Time now for a short breather. We'll be back in just a jiffy.
वर्ष 2070 तक भारत नेट जीरो का लक्ष्य हासिल करेगा.
There is certainly a wall of capital coming into the clean tech, climate tech space, not just in India but across the world.
This and more, streaming on world's first news OTT, News9 Plus. Download now.
A defiant performance by Ten Hag's men. Now standing at 7 feet 4 inches, Satnam Singh is making his way into professional wrestling.
We are getting more good news for India.
Bangalore traffic is an example of something that has gone wrong with our system.
We have more than 50 flyovers in Bangalore city. If flyover is a solution to traffic problem, Bangalore should not have traffic problem.
According to TomTom Traffic Index 2022, Bangalore is ranked as the second worst city in the world when it comes to traffic.
The speed limit at the ORR is 80 kilometers per hour, but our vehicle has only moved 10 kilometers per hour.
What Bangalore needs is a surgery, but what we have been offered repeatedly are band-aids.
Only on the world's first news OTT. News9 Plus, ahead of the curve.
Since the last 2 years, Khalistani terror groups are threatening Indian diplomats in Canada, US, UK and Australia. Investigations of these threats led us to the first ever abduction and killing of an Indian diplomat, Ravindra Matre, in UK's Birmingham in 1984. Our months-long investigation finally led us to the murderer of Ravindra Matre, who has been hiding in Pakistan-occupied Kashmir for the last 40 years. Watch our exclusive documentary, Murder of an Indian Diplomat, where we reveal the man who killed Ravindra Matre.
Stop searching, start streaming. Download the world's first news OTT, News9 Plus, ahead of the curve.
You're watching Business Plus. I'm Krishnakumar, and we're asking the question, are Indian stock markets the real Asian giant? And answering those questions have been Mr. Kranthi Bathini, who continues to breathe with us. Kranthi, we were discussing the Chinese stock markets, and the latest is that the Chinese government could be looking at a 2 trillion yuan or a $278 billion rescue package for China's stock markets, which have been on the downward spiral in the recent past. And that's the kind of situation that China's stock markets are in, to the point where many investing in Chinese stocks are also looking at stocks which have exposure to Japan, which is a more stable market. So which means that China and consequently Hong Kong both these stock markets have been in some of the toughest times, and at a time when India's growth has been unabated. And that is the reason why I'm asking, have we reached that point where India is certainly taking the lead? And the next time when anybody wants to get the Asian mood check, they should, of course, look at Nikkei. Let's not downplay Japan's stock markets, which have been the best performing stock market in the world over the course of last year, even better than the American stock markets. But apart from Japan, it has to be India, simply considering the potential for its own economy's growth. I mean, the underlying economy is set to grow faster than any other economy in the region. In fact, most other economies in the world. And the kind of bull run, the sustained bull run that we witnessed over the course of the last 8 years.
Yeah, Krishna. Coming to your point, if we observe the Japan market has been doing well, the Nikkei has been doing well, but we need to understand the market was in a downtrend almost all for more than 25 years. After spending 25 years in downtrend, we can see some kind of, it formed the bottom and it's trying to stand on its feet. And the companies have been doing well because of the growth in the emerging markets only, their market could able to do well. Coming to your point, the impetus has been changing right now. If we have to compare the entire market space in a single go, of course, India has been becoming the favorite right now, but it's going to be the favorite destination for the investors for a period of time. But the notion has been changing, and what we can see is in the emerging market space or the frontier market space, Indian market has been one of the strong outperformer. The Indian companies have been doing good, but still there is a lot more to come from the Indian companies that we can see in the coming years. It's not going to happen overnight. It's going to happen over a period of time.
Right. One other point I want to discuss with Suyash before Suyash comes to you. Suyash, the fact of the matter is that Japanese stock markets have even come up also because they've had great corporate governance norms that have been, in the recent past that have been implemented. So that's a cue for Indian stock markets to take, isn't it?
Definitely, and I mean, what's good, because the markets are definitely rallying, but rupee is feeling the heat. So there needs to be some basis or some solution to, provide that support to rupee as well. But, it's not just the Indian equity markets that are attracting foreign flows. It's a debt market as well. HSBC put out a report that expects $100 billion inflows for the debt market as well. We know JP Morgan has decided to include Indian government bonds in its emerging market basket, and Bloomberg is also looking to include Indian government bonds as well. So there is not just inflows coming into equities but debt as well.
Right, fair enough. Not just equities, but debt as well. But I'm afraid we've completely run out of time here as far as discussing this. We'll continue to discuss this going forward. For now, I'm going to thank Kranthi, Bathini, Equity Strategist at WealthMills Securities, for taking time out to be with us here on Business Plus. Thank you, Kranthi, for being with us, and we hope to keep having you on this subject and other subjects as far as India stock markets are concerned going forward. But time now to shift our focus away from India's stock markets to the upcoming Indian Budget 2024. We are continuing with our special pre-budget coverage that we've been doing over the course of the past many days. And today on this edition of Business Plus, we are putting the focus on the healthcare sector. Will Budget 2024 provide a booster dose for healthcare? That's the question we're asking on this edition of Business Plus. Because bear in mind, the healthcare sector is a key important sector for India's growing population. So what can we expect from Budget 2024? What policies are likely to get a push from the central government through the budget? What initiatives and schemes are likely to be launched? And to discuss that, we have a couple of special guests joining us. We have Dr. Sharad, Kumar, Agarwal, National President, Indian Medical Association, joining us. Thank you so much being with us. And we also have Commander Navneet, Bali Group CEO, ClearMedi Healthcare, also joining us. But I'm going to begin with Commander Navneet, Bali Group CEO of ClearMedi Healthcare, joining us at the moment. Sir, the first question is really simple. There is many that you can expect in terms of allocating funds for healthcare sector. There's been only a growth in the budget allocation for healthcare. What would you specifically look for from the upcoming budget in terms of healthcare?
I think democratization of healthcare is the most important factor right now, staring at us. And if COVID-19 has taught us any lesson, I think we need to make full use of it. Focus has to shift to Tier 2, Tier 3 cities. So incentivization of private sector, putting up, facilities in Tier 2, Tier 3 cities, I think that should be one of the priorities. The second important thing is I think the government must allocate budget for setting up small e-clinics in villages and towns. And these could be set up by using funds from the government and run by the private sector. Another area which I think we should start looking at is the insurance or the healthcare insurance sector, to give benefits to general public to get into healthcare insurance, and also to look at geriatric, palliative and home care, and this to be covered under the healthcare sector. I think if we look at all these three things, it pretty much covers from primary healthcare to what a lot of us in the towns and cities are sort of going through. And I think it'd be great if government could focus attention towards these. In addition to this, I think as far as cancer is concerned, it's staring us right at the face now. We are growing, having cancer cases come up in a very, very big numbers in all our hospitals across the country. So I think some incentivization towards buying the cancer machines like the linear accelerators, which each one of them costs close to around 20 crores to the private sector. I think this will go a long way to move towards wellness in the future. I mean, and looking at, what we are positioned right now.
Right. As we talk about all the important points that you mentioned, it's also important that when it comes to healthcare, the manpower required for healthcare is equally important. And so in that sense, are you expecting an announcement in terms of the number of nursing colleges that are going to be set up? From what we understand, there could be over 150 nursing colleges that could be set up, to staff all the hospitals that we want to have, to staff all the research facilities we want to have. We're going to need all the nurses and the doctors and the paramedical staff that will be crucial.
I think that's a very, very good point that you're mentioning. Not only for India, I think, as we say that we should be making in India as far as, a lot of these goods are concerned, India can also become a place where we train nurses and have nurses not only for us in India, but also for the world. And we become sort of a fountainhead for this trained manpower for the entire world. And in that, direction, I think this would be a great if, more number of nursing colleges and, are set up across the country, because we as a country are rightly positioned. We have a very good, number of, young people in the country, and nursing is now being looked at as a very, very good profession, for many, many, states and towns and villages where girls want to come out and, take up this as a profession. I think we can be that, country which not only, supplies nurses to our own requirements, but also caters for the world.
All right, one important point before we wrap things up, and that is the availability of ICMR labs for research by public and private colleges. You're talking about pandemic and the lessons from the pandemic. We need more research and research to be made available to public and private colleges, isn't it?
Absolutely right. I think if you remember the last budget, also this point was taken up, and we had provisions for setting up ICMR labs and labs across the country. A country which has to become self-sufficient and self-reliant in healthcare in the future has to invest in healthcare, and I think government could focus big time into this. And we are only a little slip away, or away from something of a black swan event in the future in healthcare, and we need to be completely prepared. And I completely agree with you on this.
All right, we leave it at that. Commander Navneet Bali, Group CEO of ClearMedi Healthcare. Thank you so much for taking time out to be with us here on this edition of Business Plus. And I'm afraid with that, we've completely run out of time here. Thank you, Suyash, for being with us on the show. This is Krishnakumar signing off. Don't go anywhere. Keep it with News 9 Live.
Thank you so much.
Currently, the industry is facing a lot of challenges as far as demand is concerned. Basically, that US markets